Hello and welcome. Yesterday, the European currency made an attempt to gain value against the US dollar in early trade but failed to hit the previous week's highs. As a result, the euro came under pressure again. The macroeconomic calendar included ECB and third members' speeches. However, their statements did not support the European currency. Apparently, market participants began to buy the greenback in anticipation of today's speech by Federal Reserve Chair Jerome Powell in a congressional hearing which is scheduled to last for 2 days. Obviously, he will comment on surging inflation and his aggressive plan to curb it. The head of the US Central Bank is expected to refer to interest rate hikes which are pushing the US economy into recession, as well as mention the regulator's steps to promote more rapid economic growth. Thus, his speech will be in the focus of traders and act as a factor determining further dynamics of both the US dollar and stock markets. The greenback is anticipated to advance if the Fed's stance remains aggressive. Moreover, if the central bank signals a possible 0.75 percentage point interest rate increase next week, the euro-dollar will most likely return to its one-year low. As for other fundamental statistics, market players may take notice of data on UK inflation. Britain's consumer price index is forecast to increase to 9.1% in May from 9% a month earlier. However, such a slight rise will hardly have a severe impact on the pound sterling. The European Central Bank is set to publish the minutes of its recent monetary policy meeting. Besides, ECB Vice President Luis de Guindos and ECB Board member Frank Alderson are expected to speak today. Nevertheless, the key focus will be on Jerome Powell's speech. From a technical point of view, it's worth focusing on the level of 1.0494. If the price fixes below this mark and tested from the bottom up, it will be possible to open short positions, counting on a slide to 1.0447. At this level, one can go long amid a false breakout. Following third Chair Jerome Powell's speech, the euro-dollar pair is likely to decline to 1.0388. If the price forms a false breakout at 1.0494, returns to this level in the first half of the day and tested from the top down, long positions will be relevant. In this case, the euro may correct to 1.0537. At this mark, traders will be able to go short from moving averages in the event of a false breakout, counting on Powell's hawkish comments and euros drop to 1.0447. If burst trading activity is subdued, I recommend opening short positions on a rebound at 1.0580 with a view to catching an intraday correction of 25-30 pips. As for the British pound, the situation is rather similar. The pound-dollar pair halted its nascent recovery, broke through its ascending channel and then resumed a downtrend. How much depends on UK inflation data to be realized soon. The pound sterling will most likely react negatively to the report. Thus, I recommend opening short positions amid a false breakout at 1.2174 with a view to catching a slight correction of 25-30 pips. Alternatively, if the price returns to 1.2245 and tests this level from the top down, it will be possible to go long. Counting on advance to 1.2317 and then 1.2400. At this level of 1.2400, traders will be able to go short on a rebound. Short positions at 1.2245 or 1.2317 can be considered amid a false breakout following the release of UK inflation data. Again, emphasis will placed on Jerome Powell's statement. If these price break through 1.2174 and fixes below it, the pound sterling is expected to tumble to 1.2102 and 1.2030. At the level of 1.2030 or 1.2102, one may consider long positions on the rebound, hoping to profit from an intraday correction of 30-35 pips. Good luck.